I don't need to tell you that the market is quite active right now. But this week the VIX reached 65, the fourth largest indicator of market volatility in the last 40 to 50 years. And for every one of them, I have been present. Thus, it comes in fourth place after 1987, the telecom boom in 2000, and 2008 to 2009. What does this volatility alert signify now? It typically indicates that something is changing, and that the market is either experiencing or has already had a cathartic moment. As you are aware, ever since the Fed began rising interest rates, we have long held the view that the U.S. economy, and perhaps the world economy as well, has been experiencing a rolling recession. Apparently, the other trend that was going on at the time was a rise in the carry trade, which involved borrowing yen, shorting yen, and putting dollars in assets that yielded more than those in Japan. So playing the spread. Shorting yen meant that the investor or speculator was profiting from the yen's decline, which is another reason this became a very common trade. That all changed this week though, as the Bank of Japan raised interest rates more than most people anticipated and appeared more committed to doing so. The VX has finally calmed down, perhaps as a result of numerous margin calls and a sell-off in numerous assets. We do not yet know if the carry trade has fully unwound. We're halfway there, according to JP Morgan, so maybe there will be more turbulence. However, I do think that the Fed is currently on high alert, since it appears like the stock market is pushing the Fed to keep prices high for longer in order to ensure that inflation is eliminated. Additionally, as you are aware, we have been stating for a while that inflation is ending far more quickly than the conventional indices indicate. Although the CPI is currently at 3.1, prices are declining by other measures, and if consumer confidence declines, we wouldn't be shocked to see a slightly wider decline in prices. Why will the consumer weaken or keep weakening now? We think it's because companies are losing their ability to set prices, and they will be laying off employees and speeding up efforts to boost efficiency in order to preserve margins. As a result, the unemployment rate will increase. As we listen to Chairman Powell, it is undoubtedly causing the Fed to shift its position. Additionally, I believe that the Fed will give in since the declining stock market is hurting household net worth. As a last point, declining interest rates should be very good for the stock markets, but they won't stop a recession anytime soon. In fact, what will firms and consumers do if they are aware that interest rates and possibly prices are going down? They are going to wait. We do believe that lower interest rates, once this carry trade is fully unwound, will be the decisive factor in the market's rotation away from a highly concentrated group of stocks to a much more widely diversified group of stocks. This is because the market, in its wisdom, already understands a lot of what I have told you. Furthermore, we think that as AI spreads throughout the global economy, productivity improvements will undoubtedly occur because, as I just indicated, innovation solves problems. Because we have many years of expertise and have gone through these cathartic periods of instability, we just wanted to share some insights with you. It typically indicates that a shift to a different way of thinking is taking place, and we do anticipate it will continue throughout the remainder of this year. The Magnificent Seven's 3 worst performing companies during the past 3 trading sessions, Nvidia, Tesla, and Amazon, are all down 11% to 13%. Since the commencement of the most recent selling fight last Thursday, only Meta has been positive. Come learn what he's keeping an eye on in the tech industry. Ray Wong, Principal Analyst with Constellation Research. It's lovely to see you again, and good morning. On the downside, Ray, would you purchase everything or nothing? In order to determine whether we were truly in full panic mode or whether we would return, I was going to wait to see what was happening with a few more data points. Seeing that we had a pullback and that people were genuinely waking up and realizing that one data point wouldn't cause everyone to overcorrect was encouraging in the morning. However, this is a good moment to investigate this, and I believe that some stocks are genuinely doing well in the AI space. Naturally, Nvidia will continue to exist. We will have to wait until August 28th to find out how they plan to, what their key 3 forecasts will be. More significantly, though, they will still be among the winners. You brought up Amazon. Long term, that one will be interesting to watch because I would be concerned about Amazon if the retail industry did decline and consumer spending did decline. However, there are some intriguing developments, such as the fact that AI is becoming profitable. For instance, Uber stated yesterday, "Look, better price matching, better ride batching, and algorithmic improvements have actually improved their ability to actually get more profitable." Naturally, Meta has done a tremendous job with their open models, as they are able to open source their LLM while also obtaining additional data to demonstrate their exponential efficiency and precise targeting for ad growth. In that sense, Meta is a fantastic stock. Nvidia is undoubtedly an excellent one based on what you said. So, Ray, do you simply dismiss it when we have times like these where, if it's based on a carry trade or currency fluctuations? Do you worry that, well, the multiple is kind of rich, and depending on what happens in the macro world, everything could be marked down? Or do you just concentrate on what you know about each company separately? How is it done? Do you only seek out chances to engage in your favorite activities? Right now, the main focus is on possibilities to invest in the AI revolution, and you need to determine which businesses would benefit from this technology. As a basic illustration, Adobe is profiting from AI by selling AI software. We will observe Microsoft's performance in terms of the programs they sell. Oracle has performed admirably in that regard. One business that has experience with AI is Palantir. Since C3 has been in the market, we want to evaluate who has increased their revenue the most. The projection of what that puts out there is always what matters. It is individual stocks, though. The larger problem was the macro. Indeed, the concept of debt that was previously articulated is accurate. China is likely to be in a difficult situation because of their debt bubble and slower population growth. In fact, they will resemble Japan in 20 years, and Japan was destroyed due to MMT's failure. Therefore, a U.S. jobs figure is only one piece of information and won't necessarily cause the U.S. market to collapse, but yesterday's tone was rather negative. I must interrupt with a recent incident that is incredibly entertaining. Whether you order a McFlurry at McDonald's in China, they ask whether you want an Nvidia keychain, which costs $20. The issue is that less than 10,000 clients were given access to that. As a result, their Nvidia keychain, which retails for hundreds of dollars, is currently sold out. Regarding this, Elon remarked, "In that case, I will definitely have some." He claimed not to be aware that this was taking place. Just so you know, if you want to purchase this Nvidia keychain, click the first link in the description. Although I'm not sure if this is a joint venture, both McDonald's and Nvidia have posted about it in China. In any case, this product could sell for thousands of dollars in the coming years. We don't have many opportunities to purchase rare treasures like these. Anyway, we only have 100 pieces left, so hurry and click the link in the description. The required grammatical corrections have been done without changing the original text length or meaning clearly have an impact on the company's performance and stock price. In order to evaluate Nvidia's valuation and investment potential, investors will need to keep a careful eye on both macroeconomic variables and company-specific changes as the global economy continues to change. Gaining an understanding of this intricate link can help one better understand the forces influencing Nvidia's future in the quickly evolving tech sector. Get your Nvidia keychain quickly for less than $10. We're offering a huge discount for the first 100 orders exclusively. If you require any other changes, please let me know.